Welcome to the deep dive. Today, we're really zeroing in on TSMC, the latest from, well, the heart of the semiconductor world.
hmm
We've got their Q1 2025 earnings presentation, the call transcript, financial statements, the
Right.
works.
All the raw data.
And our mission today is, to cut through that, pull out the really essential stuff you need to understand where they stand and where they're heading.
Exactly. We're going to break down the financials, look at their outlook near term, long term, and really try to figure out the key factors driving the business.
Especially the advanced tech and this whole global expansion thing, right?
Absolutely. That's crucial.
Okay, let's dive in. First quarter 2025 financials. Revenue came in at NT $839.25 billion.
Yeah, which is down slightly quarter on quarter, about 3.4%, but up massively year over year.
How much up?
41.6% year over year.
hmm
In US dollars, that's about $25.5 billion.
So that quarterly dip, that's just normal seasonality, like smartphones.
Pretty much, yeah. First quarter often sees that. But what's really interesting is how strong AI demand offset that.
Right, and they actually beat their guidance midpoint, even with the earthquake impact.
They did, which, really speaks to their operational resilience.
Yeah.
So yeah, little seasonal dip, but the underlying trend, especially driven by AI, is very strong.
Okay. What about profitability? Gross margin was 58.8%.
That's right. Down just a tiny bit, zero point 0.2 points from Q4, but up a healthy 5.7 points compared to last year.
And what's behind those margin numbers?
Well, a couple of things were pulling it. The earthquake, they estimated that shaved off about zero point 0.6 percentage points.
Okay.
And we're starting to see the very early dilution from the overseas fabs starting up, the costs involved there.
So Japan and Arizona starting to factor in.
Exactly. But on the other hand, they did have some cost improvements, which helped offset some of that pressure.
Yeah.
So core profitability is still strong, but you can see those expansion costs starting to bite a little.
Someone to watch then.
Definitely.
All right, operating margin, 48.5%. Again, down a bit sequentially, but up nicely, 6.5 points year over year.
Mm.
And net income, NT $361.56 billion. That's almost $11 billion US.
Yeah, and that's up over 60% year on year, both net income and EPS, which was NT $13.94.
60%, even with the earthquake and those initial fab costs?
Right. It really shows the operating leverage they have when demand is strong like this.
Oh, yeah.
And their annualized ROE, return on equity, is also strong at 32.7%.
Okay, bottom line looks pretty solid despite the headwinds.
Very solid.
And wafer shipments, just quickly.
259,000 12-inch equivalent wafers, down a bit, 4.7% from Q4, but up 7.6% from last year.
Got it. Okay, so that's the big picture financially. Now let's slice it by technology node. Where's the money coming from?
Yeah, this is super important for understanding their position. Advanced tech that's 7 millimeters and below it now makes up 73% of their wafer revenue.
73%, that's huge.
It is. And within that, 3 millimeters, 22%, 5 millimeters actually the biggest single chunk at 36%, and 7 millimeters, 15%.
So the leading edge is really dominant.
Absolutely underscores their leadership there.
What about the older, mature nodes?
They still matter.
Yeah.
The other 27% is spread out. You've got 1,620 millimeters at 7%, 28 millimeters also at 7%, and then it trails off for the older stuff like 40, 45 millimeters, 65 millimeters.
So it's still a decent chunk of business, but the growth is clearly at the front end.
No question.
All right, now let's pivot to the platforms. Where are these chips actually going?
High-performance computing, HPC is the big story here. That includes, data center stuff, AI chips.
Right.
It's now 59% of their revenue. 59%. And it grew 7% just from the previous quarter.
Wow, that AI demand is really showing up in the numbers.
It really is. Smartphones are next at 28%, but that was down significantly 22% quarter on quarter, which is that seasonality we mentioned.
Makes sense. And the others? IoT, auto.
IoT was 5% down a bit. Automotive was interesting, up 14% to 5% of revenue. Shows you how much more tech is going into cars.
Yeah, definitely seeing that trend.
Digital consumer electronics, DCE, was just 1%. And others was 2%, but that category actually jumped 20%.
So HPC fueled by AI is really the main engine right now?
It's clearly the primary driver here.
Yeah. Okay, that covers Q1 pretty well. Let's look ahead. What's the guidance for Q2 2025?
They're guiding for another strong quarter. Revenue expected between US $28.4 billion and $29.2 billion.
So at the midpoint, that's up.
Up about 13% sequentially and a huge 38% jump year over year. So strong momentum continuing.
But what about margins? You mentioned those dilution effects.
Right, so gross margin guidance is 57% to 59%. That's potentially down slightly again.
And that's mainly the Arizona fab starting up.
That's the main driver they called out, yeah.
Yeah.
Arizona starts contributing to the cost base. Operating margin is guided at 47% to 49%.
Okay. Anything else on Q2 guidance? Taxes.
Yeah, they mentioned a higher tax rate for Q2, around 20%,
Yeah.
because of a tax on undistributed earnings, but they expect it to drop back to the usual 14–15% in Q3 and Q4.
So full year tax rate around 16–17%.
That's what they're projecting, yes.
Okay, let's zoom out a bit. What are the big strategic messages? The broader future picture.
Well, profitability with this global expansion is definitely top of mind for them. They're explicitly saying expect about 2–3% gross margin dilution for the full year 2025.
And that's from Kumamoto and Arizona ramping up.
Correct. And looking out over the next 5 years, they see that dilution starting around 2–3% annually, but maybe widening to 3–4% later as the Arizona investment really scales up.
But they still think 53% plus gross margin is doable long term.
They do. They reiterated that long-term target. They believe their tech leadership and scale will eventually overcome that dilution.
Okay, and Capex. Still investing heavily.
Oh, yeah. They reiterated the 2025 Capex budget, US $38 billion to $42 billion. Huge number.
And where's that money going mostly?
About 70% is for advanced process technology, then maybe 10–20% for specialty tech, and 10–20% for advanced packaging, testing, mask making, and that includes the initial Arizona expansion costs, too.
And they're committed to dividends.
Yep, reaffirmed commitment to profitable growth and steadily increasing the cash dividend per share.
How do they see overall market demand shaping up, the foundry market?
They see the Foundry 2.0 industry growing well, supported by, strong AI and maybe a mild recovery elsewhere. It kind of lines up with IDC's forecasts of around 11% growth.
But TSMC expects to do better than the market.
Yeah, that's key. They expect their own revenue growth for 2025 to be close to the mid-20s% range in US dollars. So definitely outperforming the overall foundry market.
Are they worried about tariffs?
They mentioned they're monitoring it, obviously, the uncertainties, but they haven't seen customers changing their behavior yet because of it.
Okay. Now, AI is clearly the elephant in the room. What more did they say about AI demand?
It's just robust. They expect revenue just from AI accelerators, think GPUs, ASICs, HBM controllers for data centers, to double in 2025. Double.
Wow. And they need the packaging for that too, right? CoWoS?
Exactly. They're working flat out to double their CoWoS capacity this year as well to meet that demand.
Do they see this AI demand continuing long term?
It seems so. They mentioned things like new reasoning models like DeepSeek as positive signs for long-term AI adoption.
And they put a number on that growth.
Yeah, they projected their AI accelerator revenue compound annual growth rate, the CAGR, to approach the mid-40s% over the next 5 years, starting from 2024.
Mid-40s CAGR. That's quite something.
It's a staggering growth projection.
Okay, let's switch gears to the U.S. expansion. Arizona, we touched on the investment, $165 billion total. What's the latest on the ground?
Right, so that huge number includes 3 more wafer fabs beyond the first 2 advanced packaging fabs, and a major R&D center. It's a massive undertaking.
And the first fab, N4, is running smoothly.
Apparently so. High-volume production started late last year, and they said yields are already comparable to Taiwan, which is pretty remarkable.
And the Fab 2, the 3-nanometer one.
Construction's complete, and they're actually speeding up the ramp for volume production there because AI demand is so strong.
And then Fabs 3 and 4 are N2 and A16.
That's the plan. Construction set to start later this year, but they need the permits first. Fabs 5 and 6 are even further out, even more advanced nodes, depending on demand.
So they really are aiming for a huge integrated cluster, a gigafab.
That's the term they used, yeah. And they were quite clear. No joint ventures, no tech licensing, no sharing tech. This is a TSMC operation.
And once it's all built, a lot of their advanced capacity will be in the U.S.
They projected about 30% of their 2-nanometers, and more advanced capacity would eventually be in Arizona, creating like an independent leading-edge cluster there.
But it's not just the U.S., right? They have other global sites, too.
Absolutely. The Kumamoto fab in Japan, the specialty one, started volume production late 24. Good yields there, too.
And a second Japan fab planned.
Yep. Construction planned for later this year, depending on infrastructure readiness. And the Dresden, Germany specialty fab is also on track, they said, with strong government support there.
Plus more investment in Taiwan itself.
Oh, yeah. Plans for 11 wafer fabs and 4 advanced packaging facilities in Taiwan. N2 volume production starts in Taiwan in the second half of 2025.
And they're prepping N2 sites in Hsinchu and Kaohsiung.
That's right. Multiple phases planned for 2 nanometers.
Okay, let's talk about those new nodes. N2 and A16, what do they offer?
So N2, 2 nanometer, is on track for H2 2025 volume production. Ramp should be similar to N3.
Performance boost.
Yeah, they're saying 10-15% faster at the same power, OR, 25-30% less power at the same speed, plus over 15% better density than N3E.
And there's an N2P coming later.
Right, N2P and H2 2026, even better performance and power. Then comes A16.
What's special about A16 Super Power Rail?
Yeah, SPR, Super Power Rail. It's a backside power delivery network, supposed to be better for certain HPC chips. Gives another 8-10% speed boost or 15-20% power saving, plus another 7-10% density gain over N2P.
Sounds like they expect strong uptake for N2.
They do. They expect more N2 tapeouts, more designs using it in the first 2 years than they saw for N3 or N5.
Okay. Back to geopolitics briefly.
Yeah.
Tariffs. We know they're watching but not seeing customer changes. What about this idea of fair treatment in the U.S.?
Yeah, they address that. Their view seems to be, look, if subsidies or incentives are offered, they should apply equally to everyone. Either all companies get them or none do.
And they feel they can compete either way.
They express confidence in their competitiveness under either scenario.
Makes sense. What about the U.S. R&D Center? What's its main role?
Primarily, it's there to support the Arizona manufacturing cluster, help improve the tech there, allow it to operate more independently. Starts with about 1,000 engineers.
Will it do fundamental research too? New node development?
Some pathfinding, exploratory work, university collaborations, yes. They framed it as a beginning, with potential for more involvement in new node development down the road, but initially it's very focused on supporting the fabs.
Got it. And CoWoS, the advanced packaging, demand's still crazy.
Still very strong. They're working to double capacity this year, hoping things get more balanced in 2026.
Are customers using even fancier packaging?
Yeah, they mentioned CoWoS is common now. CoAS is coming next year, and SOIC system on integrated chips is also picking up steam.
What about panel-level packaging? Is that coming soon?
They said they're aggressively developing it. It's in feasibility studies now. Probably ramp up in Taiwan first before considering it for the U.S.
Okay. And the Japan fab, Kumamoto.
Yeah.
How big is its capacity?
Once it's fully ramped, it'll be 55,000 wafers per month capacity.
Is that a big revenue contributor next year?
Not significant for the company overall in 2025, they said. It's more strategic, specialty focus.
And finally, shareholder returns. Still focused on dividends over buybacks.
That's the policy. Sustainable, steadily increasing cash dividends. Buybacks aren't the primary method right now.
Okay, so let's try and wrap this up. Pulling it all together, TSMC is, well, they're navigating a really complex world, right?
Definitely. You've got massive AI demand pulling them forward, but also these huge, complex global expansion projects.
Right, and they're trying to maintain that tech leadership all the while. Q1 performance looked strong. Future guidance is strong too, but with those margin pressures from the new fabs. Exactly. The scale of investment, particularly in the U.S., is just immense. It really underscores their ambition and, frankly, their indispensability in the tech world.
It really does. So it leaves you thinking, doesn't it? With all these huge investments spreading out globally, Arizona, Japan, Germany, and all the geopolitical factors swirling around, how is the whole semiconductor supply chain going to change over the next, say, decade? What's it going to look like?
That's the billion-dollar question, isn't it? Or maybe $1 trillion now.
Probably. And what role will TSMC ultimately play in shaping that future? Because based on everything we've discussed today, it's clear they're going to be right at the center of it.
Absolutely central. Their decisions ripple through the entire industry.
Well, fascinating stuff. Thanks for joining us on the Deep Dive.